Hey, good morning, everybody. Welcome to October 31st, the last day of October. Yesterday was a decent day on Wall Street, ended up for the day. We'll go through that a little bit more in just a few minutes. But a lot of good things. We're seeing a little bit of a downturn this morning, and Dave and I will go through some of the reasons for that here in just a few moments. Looking forward to our for our conversation today. If you like what we're doing, please share this with your friends and neighbors and like our page on Facebook at Statler Financial Services.
5.7 Light FM. Sarah Bareilles is there. Morning Dave is here. And it's 8:41. Time to check in on your money and see what's going on Wall Street. Your IRA, your 401k, all of this gets affected by junk we talk about here every morning. And we're going to go downtown to the offices of Statler Financial Services and see what Phillip Statler's take is on the matter. Phillip, good morning. They're really flooding us on macro stuff this morning, aren't they?
Yeah, they are, along with flooding us on more earnings stuff too. So it's we're getting flooded across the board today.
Absolutely. Well, start out with the big news from yesterday, and that was the Federal Reserve meeting. They announced that they were dropping the target interest rate by another quarter point. And I found it kind of interesting. The market did not hyper respond to it. Normally, I expect something that looks like a seismograph from Japan right after that. And this time around, it was kind of muted and then just all of a sudden said, oh, this is okay, and then climbed up, and we ended up 115 points up on the Dow, 27 on the NASDAQ. Standard & Poor's hit a new intraday high, although it didn't close at that high, up just under 10. Evidently, the investment markets rather like the interest rate change.
Well, and I think it was kind of expected, really and truly, and then just it kept going on up from there once people kind of settled into knowing what it was. But the other part of that statement was basically the Fed said, I think we're pretty much done raising interest or lowering interest rates unless, we see something major happening in the inflation world.
It was kind of interesting. CNN took the statement text from September and just did a line out of the changes. It was almost word for word what they said in September, except instead of saying, we're looking to sustain the expansion with a strong labor market, just said, we're assessing things and watching them. Yeah, it sounds like they're kind of hinting at us that they're done and wiped with interest rate decreases for a little while, doesn't it?
Well, I think so. And I believe that that's probably the right decision. I mean, the market continues to go higher and higher. And I've talked before that, this bull market is just the longest we've seen. And at some point, we need to see that 20% correction, that bear market territory in order to get a new floor to bounce off of.
Yeah, I mean, it is to be said. Number one, recessions aren't necessarily bad for the economy. They're crummy to go through them, but they're a necessity in terms of the economy down the line. We're overdue for one. We obviously hope for a soft landing in the process, but the biggest concern, and the economist in me has been preaching for a long time, if while the economy keeps expanding, we keep dropping interest rates, what the Sam Hill ever going to do when hard times come? We run out of tools.
No, that's true. You're right. We did have some macro stuff that came out that I was I don't know. I think the jobs number was kind of indicative of what we saw on Wednesday. We did see a little bit of an increase in first-time claims, up about 5,000 from last month, and about 3,000 more than what was expected.
The government says that a good chunk of that they're figuring is probably fallout from the California wildfires, second most populated state in the country, or the most populous state in the country, suddenly has half the state on fire. Businesses closed down. A lot of people end up being out of work.
Well, that's true. Just like here when hurricanes hit, we've got people that are out of work because the businesses are just can't get to them. So same thing out there. People have had to evacuate, massive evacuations, which means they can't go to work. The businesses have to close down. And so that's a reason to file for unemployment.
Absolutely. Other information out of the government data dump this morning, it looks like we're earning more, spending more, and saving more. The savings rate went up from 8.1 to 8.3% last month. Good news for folks that have been saying we need to preserve our capital. Consumer spending also went up by 0.2%, and our income's up by 0.3% last month. All looks like a solid combination of economic factors there, and at least one of them was a surprise.
Yeah, it was. Spending kind of came in line with what was expected, but personal income grew by 0.1% more than what was expected. So it would be nice if we see that continue through the holidays.
Yeah, we've been talking about how wage growth has not really matched what we wanted to see it on the core inflation rate. So 0.3% in 1 month, you analyze that, you're at over 3.5% a year, which starts getting you to the point where it's almost healthy, isn't it?
Well, it is. However, I was reading an article this morning talking about the tax cuts Trump put in place in 2017, and how that it was supposed to raise the lower folks' income by like $4,000 a year. And that what they said is that means wage growth needed to grow by about 7.8% to make that happen.
That didn't happen. Yeah, some of
That
those
did not happen.
those prognostications out of the government, especially when they come through rosy scenario sunglasses, we invariably weird off on them. At least for this middle class taxpayer, my taxes went up, so I wasn't overly impressed.
Yeah, you were in the minority, I will say. About I don't know, 10% of the clients I saw had to pay more in taxes and not less, but that was a minority for sure.
Understood. Yeah, one of those things for some of my favorite deductions suddenly weren't deductible, and they ended up costing me big time last year. We got a few companies going through earnings season as well, giving us some indications as to which way we're going. Let's do the high points on that in a really busy macroeconomic day to boot.
Well, let's talk about the one that everybody talks about, Apple.
Yes.
Apple reported after the market closed yesterday. They came in at $3.03 a share, better than the 284 that was expected. They beat on revenue also. Expanding the iPad and the AirPod demand and growth has been a big help in their service industry. Even though they had a drop off in the iPhone sales, these other categories help boost everything else up. And so, because of that, they're trading up this morning about 1.7%, and they're really getting close to their 52-week high.
Not bad. What kind of guidance did they put through? Because that was really going to be the breaker from what I was reading, since they only had 1 week of iPhone sales for the new models in the quarter they're reporting now. Were they saying good things, bad things, or mediocre things?
I'm going to assume, which is not always a good thing, that it's good things. Nothing was actually outlined in the reports that I saw. But with the stock trading up, I'm thinking that there was some good expectations, because some of the other companies that reported, and it showed that they had, changed their outlook for the year. They're trading down this morning. So.
All right. Yeah, it's going to be interesting to watch Apple during the season. Their share of cell phone sales has been going down as they get more premium. So their prices this time around were lower than anybody expected on the new model. So it's going to be interesting to watch for the season ahead. Other indications.
So we got Facebook. Let's get some of the popular ones out there. They beat by about almost 20 cents a share. Revenue was above forecast. And so good things there. They're earning revenue. I found this interesting. Revenue per user, $7.26 during the quarter. So that was a lot higher than what analysts had kind of forecasted, and they're trading up almost 4% this morning.
I was looking at them as being one of my big winners this morning. Boy, if anybody thought Facebook was free, maybe to you and me, but we're giving up a lot in order to get to it, right?
Well, that's so true. That's so true. We talked a little bit about Uber last week, got upgraded. Lyft came in and reported their earnings today. They did not lose as much money as was expected. As a matter of fact, they were about 13 cents better than expected on the loss side. And so everybody's really kind of liking that. They're up about 3.7% also today.
The rumors of the demise of the rideshare business were highly exaggerated, weren't they?
Oh, definitely. Then you got like Starbucks, another popular one, and they didn't do anything spectacular. They came in as expected, 70 cents a share on earnings. Revenue was above what was forecasted, though. They saw their global comparable same-store sales grew by better than expected 5%. And I think one of the things they pointed out was that they've branched out and gotten a little bit more out there with their cold drinks, and that's helping
Hmm.
them on that side too. So they're up 3% this morning.
Nothing quite like pumpkin spice to save a company's quarter, right?
Well, exactly. Hey, that's hitting the streets right now.
A national holiday. I'm seeing all winners so far. You got to have some that didn't do quite that well.
Well, we do have some that everybody seemed to beat on the number side, but Bristol Myers came in, the drug maker. They did beat by 10 cents a share. Revenue was ahead of forecast, but they cut their full year guidance. So they're trading down 1.3% this morning. We had Generac, which is pretty popular for us here in Florida. They are the manufacturer of that home house generator.
Yeah, the big back generator company.
That's
Yeah.
right. I mean, they're important to us here in Florida. They beat by 10 cents a share, beat on revenue also. They had a lot of demand because of a lot of the things that are happening in the blackouts in California. So people are using them for that. But they're still trading down this morning. I couldn't see anything else in the report to give me any indication why. But they're down about 2.25% this morning.
Wow.
Yeah.
Any other household names we picked up on this morning?
So let's look at the cosmetics. Estee Lauder came in. Again, they beat across the board. I mean, they beat on revenue. They beat on earnings per share. Had a great quarter, but they're adjusting their full year outlook because of some softness they see coming in their brick and mortar retail stores. Even though they raised their dividend by 12%, they're trading down this morning another 3.25%.
I was going to say that was one of the ones on my big loser list this morning. Well, let's set the table for yesterday and look ahead toward today here. Yesterday, off of the interest rate change as much as anything, things looked relatively good. Dow up 105, NASDAQ up by 27, S&P up by just under 10 with a new intraday record. Little profit taking and a little bit of reaction to the reports that we were talking about this morning, Phillip. I'm going to bet you a nickel we're not going to keep green going 45 minutes away when we open.
No, and they say a lot of it's based on the trade deal with China again. China came out and kind of said, hey, we're having some trust issues with Trump. If we agree to something, we're afraid he's going to change his mind again. And so everything's trading down about 0.2%. The Dow's down $50. The S&P 500 is down $5.50, and the Nasdaq's doing the best right now, down less than 0.1%, down $5. So everything's looking red right now on that side. We're getting some good news on the gold and silver front. Gold's up 1%, silver's up 1.25%, and crude oil is going the way you and I like it to go, and that's down. It's down by 1.25% to $54.37 a barrel.
Cool. Overseas markets are kind of the opposite of what I would have expected off of the Chinese trade pattern. Both Japan and Hong Kong traded up at the close this morning. Europe in general is mixed. England is down and Germany is up by just a tinch. On balance, we got a pink day going halfway through the European trading day. Phillip, need advice for how to stabilize my retirement fund and how to make sure I can retire securely. How do I make an appointment with you?
Dave, if folks out there are hanging their hat on the old-fashioned risk tolerance questionnaires, that could be a big mistake given where the markets are today. It's vitally important that people get a true sense of what their risk number is, and that's one of the things we offer in our financial x-ray review. Call us right now to schedule yours, 382-0037. No obligation on your part at all. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings, where you can get a lot of great information on News Talk 730 a.m.
All righty, and back with the current stuff tomorrow morning right here, same time on Light FM. Phillip, thank you so much. You have a good day, all right?
All right, Dave, you too, and I look forward to speaking to you tomorrow.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done your homework yet?
Hey, folks, I want to thank you again for joining us today. Hope you have a great day. I look forward to speaking to you again tomorrow.